Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, the Fed is really late this time. We're going to talk about what that means in this video. Let's dive in.
Trade Genius.
Before we get into today's video, I wanted to talk, Bob, about today had some awesome moves and you guys caught what Nvidia's short and some other things, and people made decent money in the room today.
Yeah, so, actually, you called it yesterday and said, hey, dead cat bounce. Japan extended it overnight. They gave us a great gift in the morning because they popped it just like last week. They did that pop, and then going into Europe close, we had that big sell-off. And, guys, I think for a total of, $7,000 in margin, we walked away with $9,000 in profit. These days don't come like that very often. So perspective is, it probably paid for between 9 and 15 years of subscription services for people just to see the ROI you have with us at Trade Genius. So get in the room, guys. We're going to help you navigate this stuff and tell you the next 6 weeks, we're going to have these volatile moves that are just going to be very, very, very profitable, Phil.
Yep.
And speaking of volatility, let's talk about this 2-year chart. So, my view is that you don't need the Federal Reserve because the 2 years should be your proxy for what the rate should be. And they should just basically AI it. And then, the federal government should backstop the banks with a high interest rate so that the federal government can make money without having bankers with their hands in their pocket as a toll booth. And here we just solved the Federal Reserve problem. All we then have to do now is just limit their ability to create money out of thin air. And we're back to sound money. But to this chart here, it's basically showing that the 2 years leading the Fed once again. And I think for sure, Phil, we're going to see a September rate cut. What do you think? Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, they're late, right? I mean, they should have already started to cut. But I think, the problem the Fed has, and they're somewhat constrained, is that if you think about every time they said anything dovish or remotely dovish at any of their pressers, what did the market do? It just took off, right? And so I think the Fed was tired of dealing with that because a rocketing market is not going to help their inflation flight, because ultimately that trickles down into asset prices and input costs for things, right? And so it is a problem. So I think they're purposefully trying to be late here to try to get ahead of that inflation monster. But make no mistake, they have to cut here, because if they don't, we're going to have a situation that starts to accelerate out of control to the downside, and simply because the economy is slowing down and there's a ton of leverage in the system. So I think September is definitely a cut. The question I think now is not so much is a September cut, but how big of a cut, right? Is it 25 basis points or 50 basis points? I think the Fed's still going to be leery about being too aggressive on the initial cut, but I think that also depends on what happens between now and September. If the market continues to decline, we're going to get a 50 basis point cut. Who knows? You might even get a preemptive emergency cut if things really get out of control. I think that a lot of that has to do with what is all intertwined with this yen carry trade, right? If by and large the worst is behind us and there's just going to be some washout here and the lows consolidate a little bit, then I think we're good to go. Probably a quarter basis point cut, into September, and then more cuts as we progress through the year after the election. I think, that's where the things are going to get a lot weaker. But I think Yellen right now, the other thing too is you got to look at net liquidity, and we're starting to see that go up. The RRP, the reverse repo, is dropping. So those of you that get the newsletter, you see the net liquidity graphs, you'll notice that's going back up. That has been telling us it's been risk off, right? So this pullback and this weakness in the market isn't really a surprise if you look at the net liquidity flows. But those are going to start to rebound here as we get that typical, it's just the games they play, right? Treasury is going to juice the market into the election. But Fed's late, I think, is late on purpose, but it also may exacerbate market weakness in Q4.
Yeah, I mean, I don't disagree with you. I think it's political right now with the Fed. I don't mean Republican, Democrat. I mean, I think they're trying to take back control of the monetary policy away from Treasury. But look, you said it before, and we said it till we're blue in the face. If you want the kid to go to bed on time, you don't give him sugar, right? And so these balance sheet moves, look, they could have just kept interest rates at 0% and just offloaded the balance sheet.
Right.
It had the same effect without screwing the rest of the
Yep.
country up. But they didn't do that.
Nope.
They did it to fund the banks, and they still didn't take away the balance sheet. So that's a problem, and they're never going to get that balance sheet down, so
No.
we're going to be just dealing with these ups and downs. But the volatility guys say, weakness into OPEX, the seasonality says we should get a pop here in August. The yen carry trade is basically a big unknown. And the other unknown out there is, I think it's not a question of if Iran's going to attack anybody. It's a question of what are they going to attack and what the response is going to be. Because just keep an eye on energy, guys. Energy was up big today. Part of it is because of the EIA reports, but also if you're a trader and you have money, do you really want to be short oil going into the weekend with the Iran war? Absolutely not. And you really want to be long the markets if Iran has an attack? Probably not either. So this is what we're dealing with right now, Phil.
Yeah, and there was some reports that Egypt instructed Egyptian air not to fly into Iranian airspace, and I think there was another warning too about Lebanon's airspace. So something's going on. Maybe that was contributing to why the market was pulling down into the close, because there's maybe some knowns in terms of what happens overnight over there in that region in terms of conflict. If there is some kind of kinetic warfare exchange, then I think the knee jerk is going to be lower. But you got to remember too, all of those reactions get bought back. Bitcoin was very sensitive every time there was a flare up between Israel and Gaza, right? And that would create like instant, $1,500, $2,000 pullbacks, right? Really dumpy. And then it would just buy it right back. So I think you're going to see something similar. But if there is a new conflict that starts to expand in that region, ultimately the market's going to buy it up. Every conflict, I mean, you can look at when Russia invaded Crimea or when Russia invaded Ukraine. Those were actually extremely bullish catalysts for the market. It's just the way that the markets react to this stuff. Ultimately, geopolitical turmoil is bullish in these markets, and you shouldn't expect any different. So we may see a knee-jerk reaction if something flares up and it's sustained. Ultimately, though, that's going to probably help our scenario for a blow-off move towards the election.
Yeah, and the only caveat is if they hit the oil fields, then oil is going to pop and it'll cause some turmoil. But that's why you have to be long energy. So always a silver lining. Thanks, Phil. I'll see you guys tomorrow. And, thanks for trading with us. If you haven't traded with us, guys, come trade with us. We think we have a pretty good pulse on these markets, and we'll help you navigate them pretty effectively. Have a great night.
We'll see you guys tomorrow. Take care.
Trade Genius.